Good afternoon this Tuesday, March 31st. Well, it's end of the month, end of the quarter. And of course, today, the quarterly stocks and USDA acreage report. Let's take a look at what they had to say. On the stocks number, corn using more feed usage for another second quarter in a row. The estimate coming in some 80 million bushels under expectations. Soybeans, though, were a bit above, even though they had their friendly news on the acreage number. And wheat, pretty quiet. But the big thing that I think everybody's had a sigh of relief, no massive numbers that they would love to put out. This was actually the biggest number above an estimate, and it was not something to be worried about like that January number that we had received. So, acreage, we had warned that the estimates were too low. The USDA mail-in period, even though they could have mailed them in second week of March, most already knew what they wanted to do for corn, and they saw the February insurance and they mailed their cards in. So I suspected the number would be higher than the average guess, 94.31. So it was 900,000 acres higher than expected. The February outlook was 94 million acres. Now I think we'll probably get closer to this come June 30th, or maybe this number, especially the bean number, which of course was lower, as I said it could be, versus the higher guess. Again, this is probably where we're going to come in at, if not even higher on beans. We'll see, because November beans today definitely competing for that corn. All wheat acreage down from the average guess. Last year, 45.32. We knew it was coming down, but we were a whole million acres under, and that's courtesy of spring wheat being a full 400,000 acres below the average guess and 600,000 almost from last year. But every category down just a little bit. Durham off just slightly, especially from last year. The oats number also down slightly from guesses, close to last year. Barley down from average guesses. Even rice down from average guesses and from last year's number. Note that total acreage down from last year by 2 million acres. Average guess was down not quite a million acres, and it came in at 246.6. That was from all these other commodities. As far as corn and beans, this comes right in at 180 million acres, and that's pretty much where we were last year. So the market collected a sigh of relief, trying to trade higher on the session, but late in the day, they really went after wheat, taking it off its highs, but beans and corn held fairly decent. So corn, May contract, slamming right into our 50-day moving average, holding, setting up that this was a 1-2, ABC2, right there. We should start another climb going into April. April, May, this is when corn likes to peak. These 2 months, April, May, are seasonally when we get a high in corn, especially if we get China looking at U.S. corn when we get to the beginning of May with President Trump on the way in mid-May. They're going to want to please them, and I think buying corn along with that 8 million metric tons of beans will help push us up there to the 480 range. We're looking at making old crop corn sales in the 490 range to clean up last year's sales. New crop December corn, look at here. They hammered it through the 20-day moving average, a faster one I run here on December corn, but still on the close, holding in this pocket. So there too, suspect from here should get a bounce going again in December corn. Soybeans, daily continuation chart. Look at all these outside day movements. Outside day up of a previous day, no follow through. And then we have this key reversal day down, no follow through. And now we have an outside day up. I guess we can just throw outside days out the book. Right now, friendly outcome, possible that tomorrow, first trading day of the month, we're maybe starting another advance in here. Maybe wave 4 is already in play over here, and we are starting the walk higher, especially, like I said, President Trump's trip mid-May would time out for a April rally on these beans, especially with our exports hanging solid. The exports out of Brazil, even though we're premium, we're a reliable supplier, and they're buying our beans. July beans contract, look at here, holding this goofy 22-day moving average as we chip chop around, but we need to run through 1196 on a closing basis. Then we'll probably be taking another press higher. Kansas City wheat. We did make a new high close for the calendar year today, along with a new high close for the last year. but they just wouldn't let it close above the March 2nd high. They made a run through it after the report and nothing but selling afterwards. And the weather forecast remains pretty much dry for that western area of the wheat belt. Those that are getting rain, you're going to keep getting rain. Those that don't have it, don't get it. So the question is the bad going to be offset by the good? And or is there an interest in the world to probably start securing wheat? And you know what? Stockpile some of it, because India is going to have a problem getting potash and the urea out of the Persian Gulf in a timely manner, as even President Trump said overnight, he doesn't care if the Strait of Hormuz ever gets open. So that's going to be a problem for India, which helps us stay in play for our wheat market push towards $7, which is not crazy on the monthly charts. Look at how trivial a 25% retracement would be from the Ukrainian high to the low here made last year. It's nothing to get to $7. We have sell orders, $6.93 or something like that in the weekend hedger. We think we have a shot. And that shot typically occurs around the second, third week of April, especially when the weather intensifies and everybody starts to panic over the dryness. Now let's get to cattle. Another power move to the upside today. And unless it moves lower tomorrow, I'll have to change the count. But for now, you've got your top last fall, wave one down, and wave twos, Bs, they're vicious. They can play this out. Wave two, I believe, is here, but we scored right into it. And I said we can triple top it. And for that matter, we can do a truncated high. You see this high up here near 350? They could bump it, only close above it one day and drop, and you're still head and shoulders top. And let's take a look at the daily continuation chart, and you can see left shoulder, head, and of course these right shoulders. They're difficult. What you do see is this triple top capability, continuation chart. We're not rolling higher as much. And of course, we could say the same thing occurred here back in 2023, 24, but we had this, lower side trending off the highs, then went through it. I don't think we get that as easily this year. We had our February, March Black Swan event. Now we're coming back to the highs. Can the current cash trade push through 248, especially when our cattle numbers are the most flush in June, July, and August? Of course, last year we rallied into June, July, August because we were wanting the beef because we had all those tariffs on Brazilian and Argentine beef. We don't have that this year. And the tariffs after they meet quotas is only 25%, a lot lower than China. So rushing out of here on Live Cattle Weekly, I don't think it's there. That's why we got to be careful and just say, you know what? We now have ran the momentum, and now we're just dealing with, market deciding where the tightness always, stops the trade. Box beef today, $3.95. It's not like it's $4.20 like last fall. Again, we've got to get box beef to increase. But as we walk out of April into May and June, the natural birth cycle, cattle numbers will increase. And maybe not like last year, we just do a lot of sideways trading up here. Same thing goes with feeder cattle. Today's pop higher. I can make the same case. I could actually move this wave two, and I could put this over here and put this in parentheses, and I can wave count this as an ABC wave two, and then a drop. And this was a shallow ABC, and then put a big A up here, and then a shallow B here, and then a failed C for a 2. I don't mean to be complicated, but what I'm basically saying again is momentum is probably done. We've had this power bull move, and now we have, left shoulder, head, right shoulder, and whether we truncate and bring this one up through 373, I don't know, maybe we do. What I'm warning about is that we have a topping phase going on here, and the possibility of $400 feeder cattle. Well, I do remember Mexico saying they'd be screwworm free by mid-2026. I don't think that's going to happen. But the point is, I think our imports are continuing on the rise. Our exports are slowing. And now we got the consumers who are going to have high-priced fuel well into the summer. How are they going to handle that? You and I can handle that. The K economy, K shape that we have, those that have are okay. Those that don't have are getting worse. Chicken is going to become quite more popular than a hamburger at $8 a pound. And that's what I'm worried about in here. So again, I just have to say, we're working a topping phase up in here. Just a matter of what's the next black swan event that sends the cattle market lower. Maybe it is consumer demand cracking, and we'll see it. This is Eugene Grainer with Heartland Investor Capital Management. I hope you find all this information useful.